Hi everybody and welcome to Accounting and Accountability. My name is Amanda White.
I'm Nelson Ma.
And we're academics here at the UTS Business School. We had planned a show last week, but of course it's due back, so all the stress disappeared after the semester and I became unwell.
Yes.
And my body seems to know this because in autumn session, I got appendicitis and needed to have my appendix out during StuVac. Luckily that didn't happen again because I've only got one appendix. But there's been a couple of big news stories that we had planned for last week that we're carrying over to this week. And the first one is Elon Musk and the news that apparently the Starlink project has broken even when it comes to cash flow. Now, Nelson, what is Starlink? And we all know Elon, right? It's the guy who potentially has destroyed Twitter. Or X
now,
whatever we call it.
It's no longer Twitter. So basically, Musk's side project to obviously Tesla and X is Starlink, and basically it's the world's largest satellite operator. And so I've got to throw my pun in here. Starlink has achieved what we call a new financial orbit, in a sense. And basically, what's happened is they've broken even from a cash basis, and so. Just for context overall, basically Starlink operates about 5,000 low orbit satellites, and it's very famously being used by the Ukrainians during the war when a lot of their telecommunications networks were knocked down by the Russians. And so, it's an alternative to using the traditional
sort of systems. I've seen Starlink a lot on a lot of those vlogs where people live out of their van or whole families live in a caravan.
Yeah.
And so they have Starlink as their way to get internet.
Exactly.
But break even is a really important accounting concept. Typically, when we talk about break even from an accounting perspective, it's when our contribution margin, which is our selling price minus our variable costs, we sell enough so that the contribution margin covers these fixed costs.
Yes.
The costs that we incur in our business no matter how much we sell.
Yes.
And that's really important because if you can't cover rent, wages, insurance, then you're always going to be losing money.
Yes.
Now with Starlink, they've reached break even when it comes to cash flow. What does that mean?
So break even in terms of cash flow means that the cash coming in from their customers is more than the cash leaving their business.
Or at least meets the covers it.
Or at a point where it's about equal. So what is the difference between what we consider typical break-even from a profit perspective versus break-even from a cash flow?
Now, break-even, when we think about the income statement and the profit and loss, includes potentially accrual accounting.
Yep.
So cash is purely a 12-month period of the money coming in and the money going out, and that's really important from a sustainability perspective. It means that you don't need to keep getting investors to inject more cash in the business to be able to keep selling your product or providing your good or your service. It doesn't necessarily mean that Starlink is profitable because there are probably still other types of costs that they're incurring through growth and investing in more satellites.
Yeah.
But from the pure aspect of selling subscriptions versus the cost of providing those subscriptions through their infrastructure, taking into account that they're giving discounted or free access in particular situations, then that's a good thing. It's a good step to become self-sufficient from an operations perspective, and then hopefully you'll be able to grow your business to generate profit to help pay off some of the debts you might have incurred to be able to invest in new infrastructure.
Yeah, well, I guess if we were to take an example of why cash flow break-even doesn't mean profit break-even is something big like depreciation. So they have 5,000 satellites. Every year that they're being used, they lose value, right? Because they need to maintained and then eventually replaced. So so they might be, from a cash flow standpoint, they're not losing money, but they might still be losing a lot of money from a profit perspective.
Yeah. But the cash is important.
But cash is really important.
As an investor, then you know that they're probably not going to be asking you for more just to prop up their operations. Now,
absolutely.
One woman who has no need of additional cash flow is the world's newest projected billionaire, which is Taylor Swift.
Yes.
Her and Nelson has written. Was this the actual title, or did you come up with this pun?
I wrote up.
Okay, so we have to give credit to Nelson.
Yes.
Taylor Swift's Eras concert tour takes her into a financial era, and she has become a new financial era.
Yes,
and so she is, of course, now projected to become a billionaire. She writes songs, she performs, she's got the concerts, all the merch that goes with that.
Yes. What's really cool is there's also an academic conference that was run a couple months ago around Taylor Swift about her influence on culture around the world.
And I think
that was in Melbourne.
Was it in Melbourne?
Yeah.
And I think at UC Berkeley or one of these universities in the United States is having a whole subject that you can take in a course related to Taylor Swift.
That's pretty
so
amazing.
She's a billionaire. She's got massive cultural influence, and she's done this through music.
Yeah.
So she doesn't spruik a lot of other things.
Well, yeah. Well, I guess that's the thing is if you think about artists like Jay-Z and Kanye, like they've made a lot of their wealth through other ventures. That's not just music.
Through that sort of collaboration with brand, whether that's
clothes,
Adidas, shoes,
with Kanye and
alcoholic products.
Jay-Z's champagne.
I always think of I was in Costco the other day and I saw Snoop Dogg's wine.
Oh yes,
discounted.
19 Crimes.
Yes, I think that's it. It's not really making me want to buy the wine, but people are thinking. A lot of stars are looking to diversify.
Yes,
we've just had the end of the SAG-AFTRA strike, in which lots of people thought, okay, well, how do I diversify my brand and make money in other ways? All of these articles have said she's worth $1 billion.
Yes.
Does that mean she has $1 billion in cash sitting in her bank account?
Well, that's a really great question. I mean, not quite. I mean, she has, I'm guessing, a lot of cash sitting in a bank account or in some sort of investments that are liquids and shares or whatever it is. So she's made about half of her money from royalties, her tour and the movie release, so about $500 million.
And the royalties, remember, are like every time you stream on Spotify or Apple. I'm an Apple Music person. Or it's featured in a movie or it's played on the radio, she receives earnings from that.
Every single time you listen to one of her songs, she gets like a really, really, really minute amount, but then obviously adds up over the many, many billions of streams that she gets.
Billions of streams.
So that $500 million of all those little bits from her tours and all that stuff, that is sitting in some form, in a bank account or some other form of asset. However, there's also another over 500 million that sits in, that isn't actually a cash amount or isn't sitting in cash.
It's an intangible asset,
It's an intangible
right?
asset, and that's her music itself.
And she now, so she re-recorded, so her previous manager had sold all of her masters, which is the original track, to the music to Scooter Braun, which she didn't want. And it was Kelly Clarkson that said, why don't you just re-record all of your albums? Big shout out to the Taylor Swift Club at UTS. I know that they've been doing launch parties for all of the new album drops.
Yep.
But that is giving her a bigger asset because she now owns and controls all of this music.
Well, basically, she signed a new contract with Universal and Republic Records that allowed her to retain all the rights to her music. And as a result of retaining all the rights to her music, that means that there aren't other people taking
a slice of the pie
of whenever her music is featured in a royalty. So a big chunk of her wealth just sits in the fact that this music is worth a lot of money. So if she wanted to sell her whole catalogue of music, she would be able to sell that for over $500 million. And which
I can't imagine. Well, at this point, she's so young.
Yeah.
That she wouldn't, and that's the reason why she's re-recorded all of the masters. And this is again one of those things where fans are really talking about when you stream music, you need to make sure that you're streaming her new versions rather than her old versions.
Yeah.
But if anybody samples a bit of her music, she writes songs for someone else, or someone else is inspired or uses a part of her music, then she also receives royalties in that way as well.
But I guess this is an example of how her the typical source of earnings, through your tours and all that stuff, doesn't make her as much money as the assets she owns in her music. And so it's a kind of an example of why you should be considering, investing in assets, because these assets gain, if they're good assets, will gain value over time. And so it's
Except crypto.
Well, but Bitcoin's not doing too
But
bad.
look, if you bought Bitcoin 20 years ago, or 10 years ago,
10,
you're doing okay.
fine. So yeah, it's one of those things where it's an example of why you shouldn't rely just on a 9-to-5 job, and that you should be taking your money and putting it into some other form of asset that can help generate you more wealth.
But of course, we are not giving very
No, we're not
specific
giving- we're not
financial
giving
advice
financial
here. You
advice.
should get official financial advice, but do your research, listen to
Absolutely.
experts.
Absolutely.
And sometimes it's worth paying an expert for their advice.
Yes.
So free
Advice
expertise
on TikTok.
and
Maybe
on
not
TikTok
so-
can be a little bit difficult.
Absolutely.
Now, we have had ups and downs for during COVID.
Yeah.
We had lots of people working from home, working remotely. A lot of businesses couldn't afford to, buy their own workspaces.
Yeah.
So work sharing, like desk sharing spaces, became, really popular pre-COVID.
Yeah.
Had lots of troubles during COVID
Yes.
because nobody was working at those places.
Yes.
But one of the big ones,
Yes.
WeWork, is no more.
Yeah.
Or is,
And so WeWork, which is a co-working space company, and ironically a statement that unfortunately a lot of their employees will not be saying soon, realistically. They've just filed for bankruptcy. And so they've been WeWork, founded in 2010, basically developed co-working spaces. So they'd rent out, say, a office space, say in the Sydney CBD, and they'd redesign the whole place so that different businesses can rent out those spaces and kind of interact and collaborate. And and it kind of worked for a while. And then sort of COVID
And
hit.
they had a lot of money invested from all around the world.
Yes.
So it was worth 47 billion US dollars.
Yes.
And has lost 90% of its value to now be worth 50 million.
Yeah, and that's in US dollars.
With 10% of Taylor Swift's song catalogue.
Yeah, exactly. So,
And they've lost more than $1 billion
in this last financial year.
in operating all of these spaces.
Yeah.
There's some down here in Sydney, down in near Barangaroo.
Yep.
I think in North Sydney, I've seen
Yeah.
buildings on the highway with the
They've got
WeWork
quite
sign.
a big presence, right? But I guess
It's all this fixed cost.
this fixed
fixed cost of running the business.
The problem is a lot of the land that they the business space that they're operating in, they don't own, right?
No, so they're just renting.
That's a big problem. And so this comes down to, I think, their biggest problem. And I'd read about this many years ago, even before they collapsed. And that's the fact that they have to go and take out leases in office spaces, and they'll usually sign a lease for, say, 20 years. But then, and that's, they pay a lease expense for 20 years consistently.
And that creates a liability on the balance sheet.
That creates a big
too.
liability.
You have to
that they're paying
recognize
off.
that as a debt.
But at the same time, when it comes to actually collecting revenue, they would only sign leases with their customers for 6 months at a time.
Or even less. Right? It could be a day by day type situation for some businesses that might not need spaces all the time.
Yeah.
So then you've got this timing issue of you've got debts coming in frequently.
All the time.
And you've got revenues coming in irregularly and infrequently. And they're not guaranteed either.
Exactly.
And this is where, I guess the subscription model of Spotify, Amazon, all the streaming services sort of makes a bit more sense because you're locking people in, and even since you're not actively monthly paying, I swear there's got to be subscriptions on my credit card that I don't remember I've signed up to, that I don't notice because they're $10 here or $10 every 2 months or whatever.
But it works for these companies because that means that they're getting consistent revenue because they're constantly, investing in music and having to pay out royalties. So it kind of helps in that particular model, whereas WeWork for the longest time just relied purely on there being demand for this product, and obviously COVID meant that.
And we've seen a lot more, remote work from home.
Yeah.
Though there's lots of discussions happening in amongst Australian businesses where you might not be eligible for a bonus at some places if you don't meet a minimum number of days working in the office.
Wow.
There's been discussions that if you work from home, potentially your boss might pay you less. And of course, if it's Sydney and it's summer or it's winter, why pay for heating or air conditioning at home if you can come to work, drink coffee at work?
Exactly.
There's a whole range of other reasons also why, collegiality and getting to know your colleagues.
So WeWork is great as a concept, getting
Just
businesses into workplaces and getting them to interact with other businesses.
But that budgeting planning of how much they were going to spend and how much revenue they could generate,
Yeah.
that forecasting process was just off.
Yeah.
And it obviously didn't expect an external shock to come in like COVID,
Yes.
and then an entire change in how the world of work
Yeah.
might work. And so, they've filed for bankruptcy. There's a possibility that the business might reorganize and restructure, though who's going to take on all this debt?
Yeah.
They don't really have assets to sell besides the furniture in these places.
Yeah.
So if you're a creditor, you're not going to get a lot back.
No.
And it could be that trying to reorganize and sell the business to someone else might be the best chance you get, or you cut your losses and say, look, there's not much more we can do, and this is just a debt that's just going to have to be written off as a bad debt expense.
Yeah. Yeah. Absolutely.
Fantastic. All right. We are going to try and be back here again next week with another show. Are you anywhere next week?
I am somewhere next week.
Oh, where are you going to be next week?
I'll be in Hobart.
Oh, nice. I'm just going to open my calendar.
We'll figure this out offline.
Yeah.
But we'll try to be back.
Or
At some
and then the week after, I'm somewhere.
Oh, you're somewhere.
Maybe we'll.
Do something
Actually,
online.
should we do a show on Instagram Live? You have an Instagram
I
account.
have an Instagram.
We could.
could.
We'll figure out something. I'll post it on my stories or something on Instagram. And if you have any questions for us, we might do a bit of a Q&A type of thing as well.
Absolutely.
So if you have questions that you want Nelson or I to answer, could be accounting related, could be career related, it could be where Nelson buys his fashionable shirts.
Really cool.
Just ask us and we'll try and answer them in our next video as well. Bye.
Thanks. Bye.